non-current assets being held for sales and discontinued operations. Now, please permit me, let me share my screen, please. Okay. Are you with me? Hello?
Yeah, I can see your screen. But
Okay.
ask, sorry, please ask Matilda because I'm so leave the call. If you can.
Okay. Okay. Is Masita there? Hello? Can you see the screen? Hello, Masita. Hello, Mr. Topper, can you hear me?
Yeah, I can hear you. I
But
think she
I
is.
think the other person, maybe she's busy also.
Okay, I'll continue. She will join.
Okay. So, let me share my screen. So, so now we
Yeah,
are
I can
talking
see your
about
screen.
so can you see it now?
Yes, I can see it.
Okay. So we are talking about IFRS 5, non-current assets held for sales and discontinued operation. Now, when we are talking about non-current assets being held for sales, we are talking about a particular non-current asset. When we are talking about non-current asset, we are talking about all our fixed assets. We are talking about all these items of PPE, property, plants, and equipment. So we are talking about IS 16, the one things that are feasible, that we know that we are using for the sake of what? An entity. So we using non-current asset now. That means that we are using a particular asset for a period of time that is more than one accounting year. So any asset that is more than one accounting year, we are going to classify it as a what? Non-current asset. So the one that is less than one accounting year will be regarded as current asset. So that means that your non-current asset now, you are going to be using such asset on a particular year basis, determined by the economic future benefit that is flowing with that particular asset. That's how we are going to characterize my particular asset as a non-current asset. Now, we are not talking about IFRS 5, that is non-current asset being held for sales. We are talking about the asset. So based on, we have the definition of terms, we have general rules on the recognition, we have the criteria for classification of non-current asset or disposal group held for sales. I have my measurement, presentation, and disclosure. Now, when we are talking about non-current asset held for sales, we say this is an asset of asset that their carrying amount will be recovered principally through a series of transactions rather than through continued use. Now, what this particular word is telling us is that the asset that you've already categorized, that you are no longer using that particular asset. That means, for example, now, in a company, I have 5 cars that we are using for the sake of business. Now, we now have the determination that, okay, we will no longer be using a particular car or 2 cars for the fact that there is high cost of petrol and the likes and high cost of maintenance. So that means I need to separate all these assets from what? Continuing use. Continuing use means that, okay, I'm continuing using this particular asset over a period of time. I'm not continuing means that I will no longer be using that asset from a particular period of time. This period of time we are talking about is that, okay, we are talking about a particular accounting year, at least from January or February. So that means that I'm going to separate it. If that particular asset will no longer be used for the sake of business, that is what non-current assets held for sales. That means that this is your carried amount. That means you have the historical amount that you bought the asset. Maybe you bought the asset maybe 2 years ago, you bought it maybe 1.2 million. That means that you are going to depreciate that particular asset, depending on the economic future benefit you want to use that asset for. So if that economic future benefit is going to be used for 5 years, that means that after 5 years, you are going to sell off that particular asset. So that means that if you now decide that after the second year or the third year, you want to dispose of particular asset for whatsoever you are preparing as your statement of financial position at the end of the accounting year. Are you with me? Are you with me? So now, are you there?
Yes, you can continue.
Okay. So now, we're not talking about disposal of groups. A group of assets can be disposed of in a single transaction, and any liability directly associated with those assets that will be transferred in the transaction. We are talking about disposal group. So this disposal group means that we have a group of companies whereby we have a particular parent company who is controlling other company. I get it now. That means that a subsidiary now means that another company working with a particular company, whereby they might be given the autonomy to still be using their own particular name. But at the end of the accounting year, they are going to submit their financial report to their parent company. For example, now, we have Flour Mill of Nigeria. Flour Mill of Nigeria is what we know is a manufacturing industry in Nigeria. That means the way they are operating when it comes to what manufacture of different products. At the same time, we have other people too who are also operating independently. Example of them now, we have Eagle Flour Mill, we have Rum Oil, we have Premier Field, a lot of subsidiaries in different states. That means that once they realize that they will no longer to meet up their financial obligation, what they are going to do is that they are going to go for a what? A merger or acquisition. That means a company that is acquiring another company, that particular company is called the parent company, whereby the other company who has the desire that they want them to be acquired by other company, they are the subsidiary company. That means that this particular place that we're not talking about the subsidiary now means that, okay, if Flour Mill of Nigeria realize that or determine that they are no longer operating or want to continue to operate Eagle Flour Mill, that means that they are going to discontinue Eagle Flour Mill from their operation. That means at the end of the accounting period, it will no longer be inclusive in the financial position, but they are going to prepare a note to account for discontinuance of that particular subsidiary. The other example is single operation within an entity. That means when you are operating a particular sector or a particular segment, maybe for example now, we have the logistics. And we realize that under the logistics, we are no longer using it, or we want to discontinue operation. That is, the segment of what logistics will no longer be put in place anymore. That means that at the end of the accounting period, I need to state that, okay, I will no longer be preparing what accounts or preparing any statement regarding logistics anymore. That means no budget will be made for logistics, And at the same time, we are not expecting any revenue over the period. Now we are not saying that, okay, at the end of the period, how are you now going to prepare the account? You are going to prepare your account in different entities and separate what? Separate financial position. That means at the end of the period, your users will know that, okay, this particular segment is no longer put into use. Now, we now have discontinued operation. We have, this is a component of an entity that has either been disposed of or abandoned, or to be disposed of or to be abandoned. That means that I'm no longer utilizing that particular asset. I have determined that I will no longer be using it. I've set aside the particular what account that, okay, at the end of my period, I will no longer be using this particular account. That means that avoid, you know, basically I use a car as an example. That means that two cars I'm no longer using, I will just abandon them. That means I have the intention not to be using that particular what asset. That means that is the word discontinue what operation. Now we have the general rules on the recognition of assets. Now we said when an asset is derecognized, its carrying amount is removed from the statement of financial position, as I've explained earlier. In line with IS 16, an item of PP is the recognition in the following circumstances. The first thing is on disposal of the asset, or when no future economic benefits are expected from its use or from disposal. Now, the first one says on disposal of assets. I said this earlier on that once you are selling the particular asset off, or you determine that you no longer be using that particular asset, that means you are going to derecognize that particular asset from your books. When no future economic benefits are expected to arise from its use or from the disposal, when you realize that, okay, this car, you kept on spending money on it, I get me, it's no longer generating more revenue as expected. That means it is no longer bringing that economic future benefit for that organization. That means that particular asset has to be sold. Or if it is a group, if it is a subsidiary department or subsidiary company, they have to work, they have to be done in order not to affect the movement of transaction of that particular company. So the other one says, if a non-current asset is disposed of, the gain or loss on disposal should be included in the profit or loss in the period in which the disposal occurred. That means that this particular item is telling us that, okay, I'm no longer using that particular asset, I'm selling it off. So, and once I'm selling it off, even if I'm making gain or loss, that gain or loss must be recognized in my statement of financial position, or in my statement of profit or loss and other comprehensive, provided that that particular asset has been removed, or it has been determined that we are no longer to be using it anymore. So non-current assets are F4Cs are subject to impairment test. Once I realize that a particular asset has been subjected to impairment, that means that we are saying that, okay, if once your recoverable amount is lower than the carried amount, you have impairment. So that means that just particular asset have to be written up in our statement of financial position, presented on the separate category on the face of SOFP. So that means that I'm going to prepare that particular account separately with the preparation of notes to account, whereby my users and the readers of that FS will understand that, okay, I'm no longer putting this particular asset into use anymore. So I'm no longer depreciated. That means once you realize that you are no longer using that particular asset, you realize that that particular asset has exhausted its economic useful life. So that means you are going to sell that particular asset, maybe at scrap value or you are disposing it of. Now, we have criteria for classification of non-current assets or disposal group held for sale. Before non-current asset or disposal group can be classified as being held for sale, the following condition or criteria must be met. This is the acronym. For exam simplicity, we have MAS. What does MAS mean? So to make it more simpler, because basically I can love setting or asking questions on criteria or the conditions that a particular asset must meet before that particular asset can be categorized as what held for sales or discontinued from operation. Are you with me? Can you hear me? Mr. Topper, are you there?
Yes.
Okay. Now, the first one is management must be committed to a plan to sell the non-current asset or disposal group. If none of these criteria are met, that means that that asset cannot be categorized as non-current asset held for sale. That means that for all these criteria to be met, all the 5 criteria I'm going to be mentioning and explaining, they have to be what? They have to be put in place before anything can follow. Now, I said management who has committed that, okay, at the end of the period, I will no longer be using these 2 cars. That means, I said it earlier on, using 5 cars, that 2 cars will no longer be put in place. Those 2 cars, we have already have the intention at the beginning of that year that that particular asset will no longer be put into place. So once you know that, okay, you are no longer using that asset, that means that you've already committed that that particular asset will no longer be used. From henceforth, any transactions or any economic benefit or anything that such asset, which is a car, can bring, we will no longer be recognizing it because we've already have the commitment that we will no longer be using that particular asset. Because once you put it into place, that means that one of the criteria is not met. Definitely, we are no longer going to categorize that particular asset as being held for sale. Secondly, there must be an active plan to locate a buyer. That is the second A. I use the word mass for simplicity. For example, so that once you are going through this, your criteria, you realize that your M stands for management commitment, your A stands for active plan to locate a buyer. That means that you have the intention of selling a particular asset, you must have the intention that who is going to buy this particular car from me. That means you must have someone who wants to buy that asset within that accounting period. The third one says the asset must be available for immediate sales in its present condition. Now, this particular line says that someone who wants to sell a particular asset, you must put everything in order. That means once the buyer comes, the buyer will no longer be waiting for such particular asset. They must come, meet the asset they are buying, which means the car, in its present condition that, okay, I'm satisfied with everything I want to buy. And don't forget that active plan. That means that active plan, we have a buyer. And if this buyer too is coming, that means we will have put in place all the things that will make these assets to be in good condition. I use car as an example. So that means that if the car is faulty or there is something wrong with the car, that means that I have to put that car in a sellable condition. That means the challenges or the defaults that is affecting that particular car have to be changed. That means once the person who wants to buy the car comes, they can go with their with the asset. That means Because once this particular information is not met, that asset will no longer be categorized as what being held for sales. The next one says that sales of the asset is expected to take place within 1 year from the date of classification. That means once you make the decision that you want to sell a particular asset, you are only selling it within that same year. I have the intention of selling my car maybe as of January. Okay. If by peradventure I'm unable to sell it off as of this January, as of that January, that means all things being equal, by December, I must have sell off that particular word, or that asset must, and that particular sales must take place within that particular same year. That means that depending on the accounting period such entity is using, if that entity is using January to December, that means that transaction must take place between January to December. If that organization is utilizing maybe 2 period accounting dates, I get it. For example, what I meant by that is that your accounting period starts last year, maybe July. Automatically, it should overlap into another year. That means you are having 2 years period, using it as one accounting period. That means July to June. So that's where when you are preparing your own accounting transaction. So mind you, your own transaction must fall within the period of that July to June. From that July to June. So that means you are no longer going to start categorizing another asset that belongs to another period to that period. That means it can start July, it can take place December, it can take place February, it can take place March, it can take place April, it can take place June. That is the maximum period. The account or that particular asset will be stated that we've already classified that okay, this asset will no longer be put in the place. The last one says that the sales must be highly probable. That means highly probable means that you are comfortable that you are going to make money, you are going to generate your revenue, you are confident that this asset is ready to be sold to a particular buyer. That means once the buyer is ready to buy, that means that the sales must be highly probable. That means that nobody is losing at the end of the period. You are not losing. The same buyer too is not also what is also enjoying what such person is buying. So permit me to move to the next slide. Measurements of assets held for sales. Are you there?
Yes.
Yes.
Okay. Measurements of assets held for sales. We have a non-current asset or disposal group held for sales should be measured at the lower of its carrying amount and fair value less cost to sales. Let me explain this group, this particular line. A non-current asset that you want to sell, what are you going to use? We are going to categorize it that is the lower of its carrying amount and fair value less cost to sales. That means that we are going back to IS2, that is measurement of inventory. Don't forget that your inventory, you are categorizing 2 things. That means you are categorizing your what? Your carrying amount and your fair value less cost to sales. Basically, your realizable amount. That means the lower of the 2 is what you are going to use to recognize that particular asset. So that is the meaning. And impairment loss should be recognized where the NRV, that is net realizable value, fair value less cost to sales, is lower than the carrying amount. That is for impairment. I said it earlier on that impairment and IS2, they are different. So now, there is an exception to IS36 that requires entities to recognize an impairment loss only when recoverable amount is lower than its carrying amount. But basically, because you are not moving into IS-36, so I don't really need to dip into that IS-36. But what we really need is that once you want to categorize that asset, that should no longer be used for a particular asset, that means that you must know what are the criteria, what are the things that you must put in place. How are you going to measure your what? Your non-current asset being held for sale. Now, how do you now present it in your SOFE? In line with IFRS 5, assets held for sales are presented separately on the SOFE, and the result of discontinued operations as presented separately in profit or loss. That means when we move to the next slide, that means that we'll be looking into a particular question and illustration that all these things I've been saying earlier will now have a clear picture. Disclosures. The following should be disclosed. A description of the non-current asset or disposal of group. It must be disclosed in my words. Statement of financial position. Any gain or loss recognized when the item was classified as held for sales, they have to be disclosed. A description of the fact and circumstances of disposal. If applicable, the segment in which the non-current asset or disposal of group is presented in accordance with IFRS 8. That means that is operating segment. But believe me that as Ican is concerned, all this disclosure is not something that we really need to be cramming or to be disturbing ourselves. But basically what you need is that once you know that this particular standard is talking about something. For example, now if I'm talking about IS2, maybe IS7, they're asking about the disclosure. I'll just be telling them, I'll have to list it that, okay. For example, now, based on the disclosure I have here, in order for you to have a less stress reading for your disclosures, that means that what are the things you are going to disclose? One, if you are working on IS7, that means that you will tell them that the net operating statement, as your net operating activities from finances must be disclosed. The one from investments must be disclosed. The movement of cash flow must be disclosed. Your cash and cash flow equivalent must be disclosed. Those are the examples of what disclosure we are talking about. I get it now. So now I'm going to be moving to the next slide. Now, I have illustration. So please permit me to use Excel for a better solving. I hope you can see the screen, right?
Yes.
Okay. Now, before using the Excel, so I have illustration. Babaloja PLC provide you with statement of profit or loss of group for the period ended 31st December 2023. I have my revenue, cost of sales, gross profit, and the likes. Then I have my additional information. So, due to the economic crisis in Nigeria, Babaloja has a branch located in Kano on 1st-10-2023. The operation results of the Kano branch for the period of 31st December 2023 as follows. So I have all this information. So the now say required. We draft the statement of profit or loss in accordance with IFRS 5. That means that one thing I need to know is that based on the additional information, we need to now go back to the criteria. The first criteria tell us that management commitment that you want, they have the commitment of selling off that particular asset. Now, looking at this additional information, we realize that due to economic crisis in Nigeria, this this particular company, they have the intention of selling off this particular branch. It has met the first criteria, and all the 5 criteria must be met before you can write off this particular asset from your statement of profit or loss of group for the period. So that means the second one, do they have active plan? That is the active buyer. So once they have the active buyer, that means that it has met the criteria of IFRS 5. The other one says that that asset must be available for immediate sale. Don't forget, once you are selling that particular asset, it must be available. Is Kano branch available? I think we have a particular constitution that says that, but Kano branch will not be available until 1st January 2024. That means that I will no longer prepare any redraft statement. So I will only state that in as much the items did not meet the criteria of IFRS 5, that means that asset will not be categorized as being for sale. That means I have nothing to prepare regarding my exam. That is where examiner lies. Because all the criteria must be met before you move forward in preparing anything. Because once these criteria are met, then you go on. Once they are not met, then you leave it. Stating the criteria, the conditions, and you now advise that so period, the particular criteria does not meet the standard of IFRS 5. Therefore, it will no longer be prepared, or it is continuing from my operation. That means that asset will still be part of my statement of profit or loss for the period. Now I have all this information, so and now I want to prepare. Based on this, I now assume that okay, all my criteria are met. All my criteria are met. So that means that I will now prepare my drafted statement of profit or loss. Now,
hello, sir.
Yeah, I'm with you.
Apart from the requirements that gives away the fact that we need to use IFRS 5, if that IFRS 5 was not mentioned in that question, it won't be easy for anybody to know that IFRS 5 will be applied as a solution to this question. Is there another way we can determine that IFRS 5 will be applied if they were quiet about it in the question, in the requirements? For example, either trying to discover or try to prepare or determine the profit or loss on the account, just the way we're doing PM, finding the contribution, even though they have a loss, things like that. Is there another thing we can do to just determine if this operation or the asset management will have plan to sell it? Is there another thing we can use to know?
Yeah, the other thing you can use to know is that this depends on that. The conditions are the things you are going to use that will guide you. Are you getting me now? The conditions are what will guide you, whether the asset is what has made the criteria or not. I don't know if I've answered your question. Hello? Hello, Mr. Tope?
Hello, can you hear you?
I
want to ask, for example, now, what makes this branch or the operation available for sale, for example, on this question? Because the way I will see it, I would say some of the criteria are not met, and I will just conclude that it cannot we cannot apply IFRS 5 on this.
Okay.
And I don't know whether that will make me miss the question. That's why I'm asking this question.
Thank you very much. You know, they did not state specifically. That's why I said it earlier on that Hadn't been that in your additional information, they make mention that a particular criteria is not met. For example, I say, let's assume that, okay, they don't have an active buyer. That is one. Or two, that particular asset is not in its sellable condition. I get it. They will state it emphatically in the question that, okay, this particular thing, for example, now, they said due to economic crisis in Nigeria, Babaloja has branch located in Kano. They gave us the date. They now, in another additional information, they're not telling us that as at 31st 12, 2023, the company, the Babaloja PLC, did not have, or they tell us that, examiner doesn't come out straight. They are going to tell you that, okay, you don't have an active buyer, or maybe the person who has agreed to come to get or buy that particular branch is not available. I guess that means that it is giving you an hint that the criteria is not met. Because they just stated that, okay, due to economic crisis in Nigeria, Babaloja has a branch located in Kano. That means that because of the crisis, we just assume. I get it now, because this one is just an illustration. We just assume that, okay, we want to sell off this particular asset. That means that I believe that my criteria are met. But mind you, if they state categorically that, as I've said earlier on, that a particular condition, if one condition is not met, you will never categorize that asset as non-current asset else for sale. You are no longer selling that asset. That means it should still be part of your word statement of financial position, or statement of what profit or loss account, depending on what you are preparing over the period. I don't know if you are getting it.
I get it now. Since I get it, since they were not specific on not meeting any of the criteria, then we'll now exactly. I get it now. Okay, you can continue, sir.
Okay. Any question from Masida? Any question from Masida? Okay. Let me continue. Now, I have my statement. Of profits or loss for the year ended 31st December 2023.
Are you already on the Excel?
Yes, I am. Okay, you can see it.
Yeah, we can see it.
Okay.
You need to split screen. No, I still can't see it.
Can you see it over from the side?
No, I can't. I'm still seeing the PowerPoint.
Okay, I'm coming.
You need to unshare and share the Excel.
Okay. Sorry, please. Can you see now?
No, everything is now blank. I'm not seeing anything at all.
Okay. Can you see now?
Yes, yes.
Okay. Just a few minutes because I need the question to. Please let me unshare so that I can share the two together, please.
Okay.
Can you see the Excel?
Yes.
Okay. Now, so okay, now I have my statement of financial position for the year ended 31st December. So that means which period am I preparing my account? That means 2023. So now the first say my currency sign. If it is in naira, you are going to recognize that. And if it is not in naira, you are going to recognize whatever currency they are giving to you. So very, very important. That means I have the first thing I have is my revenue. So now I'm going to insert everything that I have regarding my account. Revenue. I have 475, 40. 475, 40. So I can put it here. 475, 40. Don't forget that I'm told that because I have to discontinue my particular operation, that means I have revenue of 14,000 naira. That means I'm going to less it off. I'm going to less it off. So that means I will now go back to my Excel. 14,000 naira. So this minus this. That means I have 461, 14. So I have my cost of sales. I have 200, 154. 200,000, 154. So the cost of sales I have here is 10,250. 10,250. So this minus, sorry, I did mistake. $10,250. This minus this. So now, for me to get what I'm looking for, so I need to get my gross profit. That means in order for me to get my gross profit is your revenue minus your cost of sales. You are going to get your gross profit. After that, I have my distribution cost. I have my distribution cost. How much is that? I have 60,400. 60,400. So, and without the question, my distribution cost here is 5,000 naira. So my distribution cost is 5,000 naira. That means this minus this. Then I have my administrative cost. Let me shorten it. Admin cost. The admin cost is 54,150. 54,150. 150. Without the question, your admin cost is 1,000 naira. Is 1,000 naira. That means because you are removing all the information that regard that particular asset. You have your finance cost. A finance cost is 14,450. 14,450. Then, as regard the question, my finance cost is 250. 250 naira. 250. So that means automatically Excel sheet, they are going to recognize the function. So then I have my investment income. This is my investment income. Nothing is going to affect it because this income, that means that it belongs to the art organization. That means everything, because they don't give us any information regarding investment income. So nothing will happen to my investment income. My investment income will remain the same. So that means I have my investment income. So 7,605. Now, I need to get my profit before tax, my PBT, profit before tax. So that means what am I going to do? That means that this minus, don't forget your distribution cost, minus, because all these ones, they are your expenses, minus your finance cost. I follow me now? So, plus, don't forget the investment income. You are adding it. That means you have 156,361. That is your what? Profit before tax. So I have my income tax expense. My income tax. So before getting this, then I will now go and prepare my information regarding discontinued operation. Statement of profit. Statement of profit. Profit or loss from discontinued operation. Now I want to prepare all the information that was given to me earlier on. So that means that I need all this information. Permit me, let me just copy them. Then my currency sign. Let me copy them. Are you ready? My cost of sales. So definitely I will get my gross profit automatically here. So I will no longer use the old one I have with me. So that means I'm comparing these two together. This minus this. So I have my distribution cost. So my distribution cost I have my admin cost. I have my finance cost. Sorry. Okay. So since I have that, don't forget, everything that belongs to this information is what we are making use of. Are you with me?
Yes.
Okay. So I have my profit before tax. Profit before tax. That means I have my gross profit minus this. Sorry, this. Okay. So now, at the end of the period, you can see that I have a loss of 2,500. Then tax. Are you with me?
Yes.
Can you see now?
And we can see the clear now.
Okay. So please let me open the question. So that means that everything that I'm getting here based on the question I'm being given. So I'm following everything based on the way they occur. So that means whatever you are going to prepare for the period now, so you are preparing it as the way they occur. Now, my income tax. Are you there?
Yes, but it's blank. We're not seeing anything.
Ah. Please let me reconnect, please.
The screen is still blank. We're not seeing anything.
Can you see
Okay,
now?
we can see it now. Yes, we can see it now.
Okay. So now I have my income tax expense. So as regard the question, I have a 35% payment. So this 35% payments now, so I'm not going to go and recognize it. 35%. Now, this 35% now, $35%. That is 0.35 multiplied by H. You have 35%. Mr. Tokwe. Okay, Mr. Musa, can you see?
Nothing is showing.
No, that's it.
What is wrong with this thing? Okay. Please, I'm coming. Network from my side. Please. How far? Hello? I can't hear you, please. Okay. The question as well, can you see? It's only the exact sheet you can preview from the side. Hello?
And I can see it now.
Okay. So that means the income tax I was giving 35%. So that means that the profit before tax, that means that I have no profit before tax. But basically, I've only calculated this particular profit based on the question that I have at hand. So permit me that based on the earlier question explanation I did, I say that depending on the kind of question, but looking at this particular place now, that means that I have profit before tax. I don't have any profit before tax. I have a loss. So once you have loss, are you going to pay tax? No. I get it now. So that means that from here now, your income tax expense, you only calculated it. That means that you are not going to pay any tax. So that means you only have profit before tax. I don't know if I'm communicating. Are you with me? What's wrong with this network today? Okay, so now because you can see I have a loss at the end of the period. So that means that particular asset that has been discontinued from operation is no longer viable. So I will now go back. My question. That means my income tax, as regard what they give, as regard my previous question, I have an income tax of 51,300. Don't forget, I said, because I don't have any loss. I will go to calculate my income tax for this period. I didn't, don't forget that if I'm calculating my profit, if there is profit broadcast, if there is a positive sign, that means that 35% of this 25, whatsoever I have here, I repeat, whatsoever I have here, hoping that if I have any profit left here, I will bring it to my income tax and deduct it from the previous income tax. I get him now. But as far as the question is concerned, now, I have a loss on my profit. That means that you are not going to pay any tax on that loss. So my previous income tax, I have 51,300. So 51,300. So that means that my profit, this will now be this minus this. I have my profit after tax. My profit after tax. EAC. So if I have any profit, that means this is your profit after tax. It will now be what? PAT, PAT from, let's say PAT for the period. For the period. If I have profit from discontinued operation, I will say my profit from discontinued operation. Because I have don't I do after tax here, and I'm not profit for the entire period. So it's now be your profit for the period of 2023 and the profit you have and the profit you have for the period plus the profit you have when you discontinue operation. That means this is your what you are calculating. So in your redrafted financial statement, this is how you are going to prepare your account. Any question? Any question?
I just want to ask, is this how how I call it now, the calculation aspect of IFRS is just deducting the activities of the discontinued operation from the main operation. Is this how it is generally?
Exactly. Yes, that's how you do it generally, depending on the way they structure the question for you or what they're asking from you.
Okay, maybe because it's just the first class. Maybe we'll have looked for maybe another a frequently asked question on calculation.
Exactly.
And if it's the same thing, probably that's another reason why they ask for the theory more.
Yes, basically they ask more of the theory most because for the professional level they ask more of the applications, not the calculation aspect. So that's what they do. So it is basically maybe sometimes they will ask you to just prepare it. Hopefully that there are questions that maybe they will just ask you. Maybe they may ask you to give them the criteria for I-5, and they will now give you maybe a particular question to solve. Then they will now be silent based on what I said earlier on, that if one particular condition is not met, so those are the key areas they can ask for the exam. And if you are going to ask any calculation aspect as well, they will surely tell you. So from the question, you will know whether you are going to prepare or not.
Would there be need to prepare any financial position? Even to financial position.
No, they will not ask you. It depends on the question they are asking you. If they give you information on financial position, you are adjusting from the financial position. So because they gave you information of profit or loss, so you are dealing with profit or loss.
Okay, but it's still the same principle would see the two.
The same principle.
Okay.
So the asset you are no longer putting in place is what you are going to remove. Even if you are given financial position, the same asset that they don't want to use anymore, you are going to go and remove it. For example, now under the item of PPE, maybe you have property, plant, and equipment. They now tell you that equipment will no longer be used anymore. You just go to your PPE, and if there's a particular amount being allocated to it, just go and remove that particular amount from it straight up. So that's what you are going to do. The same principle, the same criteria, the same measurement, the same application.
Okay, thank you.
You're welcome.
And then lastly on this tax, we know that once the
Samusa,
lastly on this tax issue, we know that when there is zero tax, when there is net profit, ordinarily there should be no tax. But what is usually done is this minimum tax. So what do we do? Do we calculate minimum tax or we just leave it FRO, CR issue and just leave it zero or consider the net the
if you are dealing with tax, that is when you now bring in your minimum tax. That's when you now bring in your
exactly. So what do we do in this CR case now when we have a loss?
You see, when you have a loss, you can state it, or categorically you can just put zero.
Okay. Okay, thank you.
You're welcome. Mr. Musa, any question?
Yeah, good evening.
Good evening, sir.
Good evening, sir. So I think I joined a bit late because I wasn't aware that it's going to be 5 p.m. today because the message wasn't clear when exactly it will start. So it was when I saw the reminder message that I joined. So you started at the time. I think what I just need is just a bit of introduction and to understand what exactly we're doing. Do you get? Once
Okay.
again, good evening, everyone.
Good evening. I am Mr. Olaluka Sodiq Bello. So I talked about corporate reporting, basically on the IFRS 5, non-current asset held for sales and discontinued from operation. I will talk about the measurements, the key things, the terminologies we need there, what we need to make use of. We make use of the criteria, and we said we have mass. We have the management commitment to sell a particular asset, whereby you decided that okay, you are no longer using a particular asset. Maybe you have two phones. You decided that you are no longer using a particular phone anymore. So that is one. So the other one is that there must be an active plan, active buyer. Maybe a friend of yours wants to buy that phone. That means that the person will have telling you that this phone I like it, I want to buy it from you. So the third one says that that phone must be in an immediate sellable condition. That means not that phone must not be faulty. So the other one says that the sales must take place within one accounting year. That means within 12 months, you must sell off that particular phone because you have the intention that you are selling off that particular phone. So you also have that the sales must be highly probable. That means that at the end of the period, you are getting something in return. They are also getting something in return. So that is the criteria. And we said the measurement. How do you measure your final IFRS 5? You test it based on what? The lower of your carrying amount and NRV, that is fair value less cost to sales. Like that, you have that of your impairment as well. So, but we did not deep into IFRS 2 and the impairment because we are basically talking about IFRS 5. That means so far you have the intention that you are no longer losing a particular asset. So you will not categorize it as assets you are still putting in place that is still generating what any economic benefit for you. So we talked about that, and we talked about disclosure as well. That all the accounts you are prepared, irrespective of the standard they are asking you, once they ask a particular question about disclosure, just be telling them categorically everything that must be stated when you are preparing that account. That's what disclosure is all about. Then we talked about then we move to the calculation aspect. So
All right, thank you, sir. So usually I'm
you're
aware
welcome.
that I think the last video I watched, I noticed that they usually have notes right ahead of the class. So do we have any note for this class?
Note, you mean the presentation of basic notes?
Note, yes. So the last class that I'd watched prior to the class, I noticed that the tutor usually shared the notes. Let's say maybe if you want to speak on corporate reporting, there's usually a note that they will send to the class ahead. So just want to understand how this will work.
Yes, exactly. I showed the notes of what we were talking about earlier. So you just said I summarize
PowerPoint will
what it's
suffice in this
about.
case.
Sir?
The PowerPoint will be fine in this case. The PowerPoint you shared that you use in explaining
Yes,
the class will
yes,
suffice in this
exactly.
case. That's what you're talking about.
Yes.
Yes, so if you
So I
can
think
read it ahead,
ahead of
yes,
the
Okay.
session.
it's online. Yeah, okay,
Yes, yes.
it's available.
I think yes, it's available.
Okay,
And
all
if
right.
not, I'm going to make sure that everything is prepared before sending it to class. Before the class starts, I will have sent it ahead so that people will have go through the notes before the class starts.
Yeah. All right, sir. Thank you.
You're welcome.
Also, Hope will be having revisions on using the Ican past questions.
Of course.
Either
Of course.
Ican past question or ECCA questions. Just guide us on whatever surprise I can want to come with.
No problems.
Okay, thank you.
You're welcome. Any other question?
None from me.
Mr. Musa?
No, please.
Okay. Can we call it a day now?
That's fine, sir.
Okay, sir. Thank you very much for your time.
Yeah, you're welcome, sir. Bye-bye.
All right, bye-bye.